That's awesome. For those of you who know me that well, I am the owner, operator, head janitor of Bulls on Wall Street. And dude, this is going to be amazing because so many of you guys don't really know exactly what into the stock game, and you want to figure some things out, and that's what I'm here for. So a couple things that we're going to be working on today is, I'm going to give you guys a peek into what we do in our trading classes, and most importantly, how to develop traders. Like, how do you go from doing what you're doing to doing what you want to do, right? That's hard, right? We all want to be doing something, but how do you make that transition? And I've lived that kind of same life for many a moons, and right, it's tough. And so one of the things, in life, we all got to work some days. And everybody, I talk to so many people, they're like, I hate my job. I want to do something else. And, well, something else, you hate your job, doesn't probably mean that you're right for trading, right? Trading is a job. And any job that you do, you can be really, really good at it if you like it, right? If you love it and you're willing to kind of go through the ups and downs, the trials and tribulations to actually become great at it. And trading is an interesting thing because, so I'm 35 years old. I've been doing this since I was in college. Not successfully, though. But I've been doing this since I was in college. And one of the things that happened to me over so many years is that, I always forced all my trading and took so many shortcuts because I just never wanted to work. I had that mentality. I didn't want to work. I didn't want to go to office. I didn't want to do anything. And so that kind of drove me to do all sorts of weird shit. Try all these different businesses. I tried Amway and multi-level marketing and trading. And opened an ink cartridge store. And I tried all sorts of bullshit over the years. And none of it really got me to where I was going. Why? Because I was just doing stuff because I didn't want to work, right? I didn't want to work in an office, right? I didn't mind working, but I want to work on my own terms. And that never worked, right? But what happened with trading, it resonated with me beyond that. I didn't want to go to the office. I'm just not meant for it. I'm a wild man. I show up late to my own fucking webinar, right? A wild man. So, but one of the things is that, it's a job, it's a profession. It's no different than being a doctor or a lawyer, an accountant, or an engineer, or whatever it might be that you're doing. And so when you think about it like that, how do you get good at it, right? How do you go from not knowing anything to being able to do it and make money? And so you have to attack it in that same manner, that kind of university style, education or systematic, education that you would need to really, really get good. And that's when I took that approach, that's what took me from just, hey, I'm trying this and losing and trying this and losing to actually making money. So I started doing this when I was in college. I sucked for years, 4 or 5 years, because I was just dabbling in it, right? When you're just dabbling in it, what are you going to do? You dabble in this, you dabble in that. Are you really going to be any good? No. And it was only when I sat down and really do it, right? Like it was my job. And that's when I got good at it. And so, that's one of the things that I'm going to hopefully be able to impress on you guys today is that we're going to go into really how to do that. Now I'm going to walk you through some of my favorite trading setups and stuff that I do, and then I'll open this thing up to some questions, and we'll have a little slumber party. So let's kind of dive into this. So a little bit about just trading in general. A little bit about trading in general, different trading setups, right? And so in trading, I want you trading in a specific way. People say, well, how do I learn trading? So if you think about trading, I want you to think about it in this particular manner, right? So, any of you guys ever try to bake anything or cook anything, right? And you guys try to do that. So, one of the things is with something like that is, guess what? When you look at a recipe, right? What do you notice? That everything is laid out in a specific manner, right? It's like, say you want to bake a cake. Well, it's like, okay, I have 2 pinches of this, 4 pinches of that, and I have 3 teaspoons of this, and I've got to cook this for X amount of time, and then what goes down? Well, now you have a recipe for how to actually bake a cake. But what ends up happening with trading is that if you are missing a piece of it, right? If you're a piece of it, then your cake is going to taste like what? Junk, right? It's not going to be there. And trading is the same way. You know, when you're looking at trading, you're thinking about trading setups, right? What you need to always be doing is thinking about, okay, the different pieces of my recipe, and then what is the order that it goes in. And if I can do that, now I have a very, very, very specific way to go and attack it, and then I've got this, right? And so you can't have really even one piece of it missing. And that's how I like to teach trading, is that, you know, in my classes, you know, we have live classes. Because, you know, I'm under the firm belief that, you know, you can't learn anything from just watching some videos, right? You know, you can learn how to do some drywall from watching YouTube videos, right? You know, you can learn how to fix your XYZ in your bathroom from watching a couple YouTube videos. But you can't learn how to do something really, really specific, right? Something that you can make a ton of money from, or something that you're going to be doing for a lifetime off just watching a couple YouTube videos. And so, you know, trading is kind of like that, right? You know, we need to be able to really, really narrow it down into terms of what great people have in terms of athletes or professionals is they have mentors, right? They have really live training. And so we mimic our classes based on that. I teach class 4 days a week, no matter what. I've been doing it for half a decade, 4 days a week, no matter what. I'm always on the tube teaching class, Sundays, Tuesdays, Wednesdays, Thursdays, 8 p.m. Eastern time. You got to have that live interaction, that live mentorship to kind of take really complicated subjects and down into something that's simple. But beyond that, right, how do you build, okay? How do you build expertise? So there's book knowledge, right? We read books. But because you read a book, it doesn't mean you know anything, right? It doesn't mean you can actually go out and do it, right? And so you have your book knowledge, but then you need to take it into real-world applications. And so guess what? You take into real-world applications means you go from book knowledge or live classes. Well, now what we do is, right, we quiz our guys. We give them homework every week, right, so that they're kind of practicing and knowing it, right? And that's C. And then from there, then okay, so what's done when our classes are over? Well, during that time, you know, I make everybody passwords to my chat room. So I'm on video just like this. You guys can see my face. There's a screen share, right? And so every morning I post a link, and then I'm trading in front of these guys. And every day I'm giving my trades live on the screen. So I'm walking them through exactly what I'm doing. Hey guys, I'm buying this, I'm buying that, and I'm shredding, right? I'm shredding or getting shredded, right? Whichever one could be happening that day. But one of the things to think about is that's how you take live book knowledge and turn it into knowledge, right? Is to watch me do it. You know, it's one thing to just watch some videos and be like, oh man, I think that guy's pretty good. It's another thing to look and every day be like, oh shit, like this guy's trading in front of me, and see, I have my trading platform up. I'm hitting the buttons. I'm showing them what the fuck these buttons do, right? Like, hey, you hit this, like we're out there trading in front of the guys. And that's how you really connect the dots, where you go from book to live. But then more importantly than that, you get the confidence of seeing, right, your man go out and make money every day or lose, whatever. But, you know, so every day I'm trading, then I post in, you know, a snapshot. I'll post a little screencast of what, right? And so it'll be like, okay, I made this, and then we go through it. We have a webinar, and we talk about the trades. How did I find it? How did I enter that? Why did I choose that one? How did I manage my risk? How did I choose my targets? So on and so forth. We reverse engineer the trade. And so look, some days we're going to be talking about fun stuff. And then, you know, look, other days, yesterday, I lost $1,500 bucks. Not talk about that. I get on the webinar. And then the day before, I make 1,700 bucks, right? And then we're just going through it every single day, you know, trying to figure out how the heck all this stuff goes down, right? And that's the really the important part of trade, going in and reverse engineering these trades. And you need to see it, right? Like, you need to know how to work the software. Like, what the fuck is this thing, right? How do you set it up? How do you do it? What's going on? And that's where you really start learning. And those are the things, you know, that really work. And we have a huge staff of people. So beyond me, I've got good students and people to help with the boot. You know, we're always available for text messages when people need help. That's the way, you know, we kind of get into these things. But, you know, 28 live classes, course books. I just redid the course book. Once this is all done, like the live classes, I put you guys on trading simulators. So we use this for 2000. You guys are probably seeing some of my, dude, this thing is amazing. It even looks cool, right? So, you know, in TC 2000, and it doesn't matter if you want to be a day trader, a swing trader, you know, whatever it might be, right? To me, that doesn't matter because I teach all of it. But one of the things to really think about is, well, class is over. What do I do? Right? How do I get better? So we put these guys on trading simulators, and this is like, you know, this thing is awesome. You can go in here and put in your order boxes and stuff, and guess what? Now you can go in and kind of shred this thing. And so one of the things that I do is I give all my guys the layouts on how all this stuff looks, right? So I have all these different layouts for different types of trading and different. Every single one of the students gets their layouts. So they get all the scans, all the technology they need. So, you know, we have TC Mail here, and I can literally send them everything I do. So now they have their software set up exactly like mine. That was one of the things. When I was a new trader, I understood a lot of the trading parts of it. What I didn't really get sometimes was how the F word do you get the software to work, right? How do you get that to work? And that was actually, I think, really important, you know, is how the heck to get that dang software to work. And so we walk you from day one. It's for people that are brand new, right, that don't know. But also beyond that, if you've already been trading for a long time but having trouble, that's even better, because a lot of times people have trouble in their trading because they have weak foundations into their trading. And so we build everybody from the ground up, because without a strong foundation, what do you have? Right? You got a leaky house. And so we got to start everybody off from the beginning. So trade simulator, market recaps, and then, you know, you'll find out, right? You know, I'm easy to get a hold of. You know, that's my cell. I'm easy to get a hold of. That's my cell. I got 517 numbers. I went to Michigan State University. I've had that number since college. That's 17 years ago I had this damn number, right? I'm easy to get a hold of. I may call you at weird times because I'm up really weird hours, because I'm trading cryptocurrencies, I'm trading futures, I'm trading stocks, and so obviously sometimes I'm doing a little bit of, but that's the nature of the game. Now for a lot of you guys, you all work, right? Some of you guys work. Good. Working is totally fine. The stuff that we do is for all types of trading. So I learned, for example, so I used to work in the recruiting business. The recruiting business, I was a headhunter, okay? As a headhunter, so I was in the cubicle, literally just cubicle farm, lifestyle, dialing for dollars, we used to call it. Dialing for dollars. And so I couldn't day trade all day. I couldn't day trade all day. I mean, that just is not going to, I'll get fired, right? I got to build money to save, right? I got to save for trading and all this stuff. Didn't work. So what I did was I did swing trading. So I learned swing trading from my mentor, Paul Singh, who works for us now. He works with me, and he does the swing trading classes. But I learned how to swing trade from Paul. And I did swing trading while I was working and built up my bankroll so that I could leave my job. I actually started day trading when I had already became a full-time trader and left my job. Because at that point, I was sitting around all day, I didn't have a job. So then guess what? I just started day trading a little bit, and I ended up really liking it. And I got good at it. And so the next thing you know, ba-boom, 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 you are a day trader. But swing trading and day trading are very, very similar. All that is different in them is that the time frames are different. The patterns are the same, but the time frames are different. Meaning, as a day trader, you're going to look at one type of chart, right? So, like, you know, we day trade, like I day trade this AAOI stock or Shop or Netflix, whatever it might be, right? You know, so guess what? This is your best day trades come from what? From setups that are going to happen on a longer term basis. So if you can trade on a longer term basis, it's much easier to day trade because you're often going to be trading the same stocks, right? It's just one is going to be intraday, you're trying to take $1 or two, where the other one is you're going to try to take $20, right? And so we teach both ways, but that's the, you know, and you got to learn that because the best day trades come from bigger term picture. Where a lot of people, education is they come into some program and it's like day trade, 1 minute charts, gap in this and gap in that. And that doesn't work because without a structural understanding of what's happening on a bigger picture, how do I know if a stock is going to run for months? Well, those are the best stocks to day trade. So you need to learn how to do longer term trades. And from there, you can build shorter term trades. And so you can't really be that good of a day trader without being a good swing trader. And so for those of you guys with jobs, that ends up being perfect. And, you know, on the other side of things, you know, like the stuff that it works well in cryptocurrencies. You know, we trade cryptocurrencies. This cryptocurrencies trade 20 a day. I trade this on weekends. One of my best cryptocurrency trades I ever did, I did on 4th of July at like some buddy's barbecue. I mean, I'm at my buddy's barbecue and all my friends are like poo-pooing me to say like, hey, why don't you play with the kids? Check out the baby. And you know what? Sitting there like, I can't play with the baby. I'm shredding. And they're like, there is no market right now. And I'm like, there's a market to trade it. If you want to trade, you're going to be able to trade. And that's just the nature of the game. So, you know, whether you have a job or don't have a job or whatever, I wouldn't worry too much about that because there's always going to be a market for you to be able to trade if you want to trade, you know. And so don't worry so much about that. But that's huge. Now, in terms of trading, like a lot of people think it's complicated. I'm going to show you today how to take a really, really complicated subject and narrow it down, right? And so in trading, this is how you have to look at it. In trading, there are literally dozens of variables that are running in any given moment when you're analyzing a stock. Beyond just a stock, there's the market, there's news, there's supply and demand and volume and sector momentum, there are chat rooms, there are an infinite number of different things that are happening on a second-by-second basis that you have to compute in an instant to get into a trade. Sounds damn complicated, doesn't it? I mean, we're not computers, some of us. So how do we do that, right? Like, how do we do that? So that, when I was new and I realized that, at some point I realized, like, wow, I have to compute an infinite number of permutations and computations to really analyze this trade. And that would overwhelm me once I came to the realization of how hard trading is. And so how do you get over that, right? How do you get over that? Well, the way over that is by taking all that data, right? And taking all those instances and stereo, essentially, by coming up with different trading setups. So what a setup is, guys, is trading patterns, right? Trading setup is similar to that. So a trading setup is a list of conditions that must trigger before a trade is taken. And it starts with a pattern, and then we overlay different facets of things that we're looking for, okay? So when you think of a trade, I want you to always think about this and remember this, whether, you know, I see you again or not, is that every trade is a coin flip. It's a 50-50 shot. You can win or lose, right? You buy or sell. Stocks go up. Sometimes they go down. Everything is a zero-sum game. You win or lose. It's all a coin flip. But how we make money is we take that and we build probability. When we look at a trading setup and we start with a pattern, what that does is if we have a high probability pattern that we know from statistics has worked well over time, and I keep statistics of everything that I do from the last so many years. So I know, for example, I take XYZ trade in the morning that has this pattern, I have a 72% win ratio. If I go red to green, 80%. If I go rubber band long, it's only 38%. What happens is, when I see certain trading setups, I start to understand what the probabilities are. So I take it from a 50-50 shot to something better. And then we start to overlay the different aspects of what a setup is. Remember, a list of conditions that must trigger before a trade is taken. So now what I'm doing is, I'm like a lawyer, right? So in a lawyer, what happens, right? You're guilty or innocent. But what you're looking for is beyond reasonable doubt, a reason to convict. And trading is the same way. So you have your hard-earned money, your kids' money for the money you make from your work. If you're going to take that money and put it into something, you need to know beyond reasonable doubt that this is something worthwhile. So we start with the pattern. Then we start to overlay different conditions. And when we see them, we start to understand what is a high probability setup. And so I teach 18 different setups, right? For all different market conditions. The market is crashing? Yes. We're going to make more money even in a bull market. The market's in a bull? Yes. There's news plays out? Perfect. Earnings plays out? Perfect. For every different type of market and every different type of stock, we have patterns and trading setups that fit that. Where people make the mistake is that oftentimes they're just one-trick ponies. I trade stocks, and when I see them do this on a 1-minute chart, I buy it. That's bullshit, right? In the hardest game in town, you're going to just sit there and trade on some little $2 stock and just kind of do a 3-minute pattern and go. Life's not that simple, right? Life is not that simple. But what we can do is take this complicated subject and make it more simple, but it's still not going to be simple. We've got to have setups that work in every single condition of the market and for every different type of stock. It's not just small cap stocks. We need to be able to trade all sorts of stocks. It could be the Amazons and the Googles, and of course, those are really, really high price, but it doesn't matter if it's a $50 stock or a $60 stock or a $20 stock. If we can make money on it, then we need to understand how to trade it, right? Because that's where it's at. And there are times in the world, like a lot of people just want to trade penny stocks or small cap stocks. Well, guess what? There are times in the market for 3 to 6 months of the year they don't move at all. When I started Bulls on Wall Street, I only traded $1 or $2 stocks. There's no money in it. No money in it except for the trading educators, of course. But there's no money in it. There's no liquidity. You can't really get in and out. Stock goes from $1 to $1.10. The guy that's in first says, I made 10%. Well, it's only fucking 10 cents, right? But the person that sees it way after, they're not going to be able to get in it. They're not going to get that full 10 cents. They're going to get 2 cents. And that's why small cap trading can be a little bit dicey. We trade it at times. It'll be maybe 20% of our trades, but we're in the game to shred, right? In all different types of stocks. Beyond that, risk management. Risk management is more than just setting stop losses, okay? Stop losses is something that we all know. But what's the most important part of risk management? Does anybody know? The most important part of risk management is understanding your personal patterns. So there's risk management on the stock, and then there's risk management on yourself. Okay? In trading, because it's such a mental game, because in the end, you still got to go out and click these buttons, right? And the hardest thing to do in trading is when you know what to do, is to actually do it. Sounds kind of stupid, right? You know what to do, but you can't do it? Well, anybody smoke? Right? You know you're not supposed to smoke, and you do it. Anybody ever eat pizza? Too much pizza? All the time I do. We know pizza ain't good for you, right? Anybody drink? I had a few beers yesterday. Shit, I live on the beach, right? Ain't that good for it? We know oftentimes what's good and bad for us, but yet we still do it. In trading, it's the same way. There'll be certain behaviors that you see and do where you're like, I've had times, like, I'll give you an example. I've had times in my trading career, I shit you not, no matter how much experience you have, by the way, I think it's just a human biological nature sometimes. A couple of weeks ago, I'm like, fuck. I was talking to my partner. His name is Saeed. Zaman is the best, maybe, natural trader I've ever seen. So I've been working with him. He's been one of my business partners for like a decade. He's a way better trader than I am. He's the moderator of our chat room. And we were looking at the stock. And I'm like, fuck, this thing looks hot, man. He's like, yeah. So we bought it. And then it was acting a little slow. And I'm like, dude, this thing's really slow. He's like, yeah. And so we're like, let's just get out of it and leave for the day. We had a great day. And so we're like, let's just leave. So he's like, yeah, you're right. And then like 10 seconds later, he's like, dude, that's so hot, man. We have to play it. I'm like, you're right, I know. So we ended up buying it back higher than I originally had it. And then 2 seconds later, he's like, dude, we really shouldn't do that, right? We said we were going to leave. I'm like, I know. And next thing you know, right, this stock starts going down. And it was like, and me and him were chit-chatting. We're like, dude. I'm like, dude, I thought you left. He's like, I thought you left. And I'm like, I did till you told me it was hot. He's like, same thing. I only thought it was hot because you agreed with me. I'm like, yeah, right? Sometimes like you're supposed to leave and you don't leave. Or you know what you're supposed to do and you don't do. And just like you're not supposed to do drugs. But sometimes, guess what? People do drugs, right? People do all sorts of stuff. So in our classes, a big part of what we focus on is not just risk management via stocks, but what are your personal patterns? I have some terrible personal patterns that have nicked me over the years. And understanding them and finding them. So I keep journals of everything. You guys will see it. So this journal is I keep notes of all my students. This journal is for myself and my day-to-day business stuff. Just endless stuff. And then This one is for like my boot camp students and people that, you know, that I work with one-on-one. So Isabel Tallard, I love her. I got literally a dozen pages of notes on it because I'm trying to understand her personal patterns, right, to help her, right? Because she's always talking to me about this. I'm writing them down, so on and so forth. But being aware of them is everything, you know, because at that point you can do it. So like, for example, I had this personal pattern where if I lost on my first trade of the day, this is about 6-7 years ago, it was an epic disaster. I would win all the time, but if I lost on the first trade of the day, I would spiral out of control in the morning. I'd be so upset that I lost my first trade that the second trade I would reach because thinking, man, I got to get my money back. And then I'd lose, and then next thing you know, it just spirals out of control. Understanding that that was my pattern, and then knowing that, hey, it's all just a numbers game. Come in! Hello?
What's up?
Hey, I'm in class. Who the fuck's that?
It's LeMay.
What's up?
I'll come back later.
No, I mean, you can hang out. I'm just telling you I'm in class.
Okay, just saying hi. I was walking by.
Oh, no, man. Good to see you.
Good to see you too.
My bad. So, like I was saying, you know, when you talk about personal patterns, it was just more of a matter of understanding the numbers of it. Hey, that I win 65% of the time, so who cares? Hey, come in. Who cares if I lose the first trade of the day, right? It was just a mental thing. And so some of that stuff is really, really important when you're thinking about just becoming a trader. What's the stuff that gets me in trouble? For some of you guys, if any of you kind of understand trading, but somehow you can't put it together, a lot of times it's psychological, right? Like, I know what to do, but I can't do. Oh, but that's huge, you know? And so always kind of think about that, right? It's like, what's holding? And that comes in with your risk management. And so then we go in and we build this out like a business, right? So what trading plans? Anybody got a trading plan? I got fucking 6 of them. All right, that I've over the years I'm always redoing. Your trading plan is your business plan, right? You ever go in a bank? You want to open a restaurant? You want to open a bar? You want to, if you're Indian, you want to open up a Dunkin' Donuts, right, or a Subway? All my people have Dunkin' Donuts or Subways, right? You want to go in if you're Indian guy and say, I want to open up a Dunkin' Donuts without a business plan. Right? You got to have one. You're going to ask the bank for money. They're going to ask you some questions. What's your game plan? How are you going to run this business? How are you going to do hiring? What are your revenue targets? Blah, 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 blah. Right? I mean, just a business plan. Your trading is the same way. So think about this. Your trading career could cost you as much, if you do it wrong, as opening a franchise business. At one point in my trading career, I lost so much fucking money. Sorry for the swearing. I lost so much damn money. My dad was like, hey, Kunal, what the fuck? I'm like, what? He's like, for as much money as you lost, you could have opened a Taco Bell. I'll tell you what, you love Taco Bell so much, you could have had Taco Bell for what you lost in trading. And right, it's like, you could have done whatever you're going to do if you're going to do it, right? Well, 7-Eleven is also the way to go. Too stereotypical and make this thing racist, right, against my own people. But 7-Eleven is the typical Indian, the typical Indian way to go about it. So you got to have a business plan for getting into this, you know. And then on the last side of things, you know, where a lot of you guys a lot of people don't even recognize is that there's as much money made on the short side as there is to the downside. So what's shorting? Shorting means to bet against something, right? So like, for example, like right now I'm short this thing. So this is Ethereum. Does anybody hear of Ethereum? This is cryptocurrencies. But, you know, Ethereum has been just sitting around for like literally like 6-7 days in this range, right? So when it broke under this right? I started looking at this for a short, meaning as it goes down, I make money. Because I had a very, very key level here, right? So all trading is inflection levels. You're looking for lines in the sand where you say, okay, if it goes below this or goes above this, this could be something. And it's, of course, a little bit beyond that. I'm just kind of simplifying it for the purpose of class. But you build a line in the sand. You're building a line in the sand that says, all right, this is something that's holding this up. And so if, guess what? It's going to go down. Simple enough, right? Right? So you're looking always for that line in the sand when you're looking at a trade. So as this thing is building this line in the sand, right, of course, you know, I mean, as an optimist, you're always hoping for it to, right, break to the upside and go up. But what if it doesn't? What are you going to do? Right? Sit with your nuts in your hand? Kind of nuts. Not very hygienic for some people. And also, you can't do it in public. Right? So, if it goes below, guess what? You bring out the Slayer, the hammer of death, the Dark Knight. You short it, right? Meaning that you are betting on it to go down. And as it goes down, you make money. And one of the things that you'll notice is as things go down, they go down a lot faster than they ever go up, right? So there's just as much money on the short side as there's on the long side. But on the other way of things is it happens fast. So like when I trade cryptocurrencies, like when I've been shorting these, I'm alerting 20 shares, 40 shares max. Doesn't have to be something crazy. Why? Because look, if it drops 20, 30 bucks, you can make 500 bucks, right? Not bad for a couple hours of work. You don't need a huge amount of money. If you're playing momentum or reverse momentum, you don't have to worry about account sizes and all that fun stuff. Of course, the more money you have in life, the more fun it is, right? You can have cooler stuff. But in trading, it doesn't matter as much as long as you got some skills. You build brick by brick. You know, everybody starts off with a small account, right? How many people just start off with millions of dollars? Doesn't work like that. So, trading plans. Like, how do you build out a trading plan? Right? That's something I'm going to have all you guys do. Right? So you focus on what works for you. So, that you need to know about trading. Swing trading, day trading, long, short, different patterns. And what do? Well, you got to focus and take all that stuff that you learn in class and what do you like out of there? Because, of course, in the beginning, you want to just do it all, right? You want to start focusing down on what you like to do. So we come in and, right, we think about, okay, these are the different aspects that I'm going to take and do right now. These are my risk management principles, personal principles, and I'm going to build out a trading plan. These are the setups that I want to take. This is going to be my daily routine. A trader's daily routine is one of the most important things that you can do, right? You wake up till the market turns on, what do? Do you wake up, just fart around, watch a little TV? What is it that you do, right? Everybody has a very, very specific. The more you can automate it and systematize it so you do the same thing that gets you ready for the day becomes huge. Because people that have very, very set morning routines, they have the ability to just turn it on when the market turns on. One of the biggest mistakes that I ever made as a new trader was just doing whatever I want to do, then show up wherever I want to show up, do whatever I want to do, and then I expect to make money. Doesn't work like that. From the minute you wake up, if you wake up with purpose and you have something that you need to do to get you ready for where you're trying to go, then guess what? When 9:30 comes on, when the market turns on, you're ready to shred, right? Because you have a plan, but you've also prepared yourself to get to that point. But most people, what they do is when they become a trader, is they just think they've made it, right? I've made it. Therefore, I'm just living. And then I check my phone, I turn on my computer when I want, and I kind of look at stuff and I trade. Well, that's not how it goes, right? Trading is a performance game. It's no different than being an athlete, right? In terms of how you get yourself ready before the lights go on. The lights go on at 9:30, and between that time, you've got to shred hard, right? Most of my money is made between 9:30 and 10, 80% of the money, 30 minutes a day. 80% of my money's made. So to get to that point so I can turn it on and really hit it like a man of honor, then I've got to do a sequence of things before I get up that gets me ready to that point, right? Because you don't just fucking wake up, roll out of bed, right? Whip out the Doritos out of your chest hair and be like, woo, I'm ready to trade. It's not going to work like that, you know? And so we need to go in and have a very, very specific daily routine. So for like me personally, it goes with a couple things. Number one, I don't like waking up to an alarm. When I was working, I had to wake up and sit in traffic for like a day. It was awful. I used to have to wake up to an alarm. My cell phone alarm? Dude, what's worse than a fucking iPhone alarm? Anybody ever? What's worse than an iPhone alarm in the morning? It is. It is the most god-awful sound in the world. And when you hear it, to do what? Feel tired, hate your life, hate everything else. It's awful. Feel groggy, whatever. So I like to wake up al natural. So usually for me, it's like I wake up in the same time every day, but it's al natural, meaning I like to get to bed at the same time every day so I can wake up in the same range every day, right? So for me, it's between 6 and 6:15. I've tried some of that fucking warrior stuff where people wake up at 4 or 5 in the morning. That stuff is awful. It really is. There's nothing worse than waking up at 4 in the morning, exercising, and feeling tired all day. So I go in with a nice, normal 6 a.m., 6:15, no alarm. I usually leave my blinds open because I'm on the beach. You know, the sun will come out. I'll see it. I just wake right up. No big deal. That gets me going. And then from there, it's just I'm showering, shaving. Look, I'm hair, right? I'm an Indian. I grow hair everywhere. I mean, if you saw me in 3 days, I could be like covered like head to toe style of just hair, right? So I got to shave. I got to do a little manscaping, right? Make myself presentable. But I got to get ready. And then from there, it's literally, I get the computer, warm up a little coffee, get going. I turn my computers on. Now, I've already done my homework at night. So in the morning, I'm more doing adjustments and looking for new earnings plays or whatever. But I'm just making adjustments. I've already done most of my homework at night. I've done my journaling because I don't want to feel rushed in the morning. Like I got to look for stocks. I got to do this. I got to do that. I want to have everything ready. I want to have a nice chill morning and hang out, right? And get myself just situated. And then it's more a matter of, right, I'll usually come in. I'll write down like 4 or 5 priorities for the day, things I got to get done no matter what. 4 or 5. And then maybe just a handful of just simple tasks. Video, call my mom, blah, 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 blah. But nothing too crazy. But then it's just a game, right, of checking it off. I'm big into winning. So anything I can check off, I feel like I'm beating somebody, right? So I make myself just a handful, simple though, right? Nothing elaborate. 3 or 4 priorities, a handful of just basic tasks, and then I let the day take me where it's going to take. You know, from 8:30 to the market opens, I have my mentorship group. So I've got a mentorship group of people I work with one-on-one, but I have a morning class every single day for them to get them ready for the market. And then from there, you know, market opens, I'm ready. And I'm usually trying to trade 1 to 2 hours max. You know, look, some days I'll trade till 2, 3 p.m. I mean, I'll trade till I have to trade if there's stuff going on. But I have strong statistics that just tell me that I burn out after a couple hours. I'm just so damn fucking energetic sometimes that You got a couple hours, and then right, you lose your fucking chi, right? There's nothing left to give. And in trading, it's the same way. The human brain can make a handful of good decisions in a row before they need a recharge. And so I'm the just similar manner is that I need a recharge, right? So for me, I try to shred for a couple hours, and then it's recharge time. Got to recharge, right? So like you'll see me like I'm pretty much always at the beach or always at my boat, you know, or doing something in the middle of the day. I like to kind of 6 a.m. to 12, then take 12 to 4 off. Then I come back, have a little dinner, and then I work my second shift into, you know, midnight, 1 a.m., whatever, you know, and go for it, right? So, you know, I like that. I like the daytime time to do whatever I like stuff, live my life. And then I like to work at the night shift. So I call the night shift the second shift, right? And that could go till, right, midnight or 1 a.m. because I'm trading cryptos at night. And, you know, I've got a business to run, which is, and I got students, right? So I got to grade their trades and do all that fun stuff and teach class at 8 p.m. Eastern time. So this is all good, you know, all stuff that goes in your trading plan. And then most importantly, your personal goals, right? Of just like what you're trying to get done, right? Where are you trying to go? What are you trying to get done? And, right? You check these things off. Check these things off and just stare at them. You know, I have, you know, I keep for all sorts of stuff. Look at it. You'll see sticky notes for everything. Little reminders for myself. I keep these things everywhere. So I got 4 monitors right now. Not that you need 4 monitors, but right now I got these little sticky notes everywhere for little reminders, right? And this is the one that $500 a day keeps the cubicle away. Nothing more, nothing less. But 500 keep the cubicle away. You know, and so that's the easiest thing to make, right? So it's when you try to go to 5,000 or 50,000, things get a little harder. But 500, I can do. Any given day, any moment, hungover, sober, don't matter. 500, keep the cubicle away. And that's always on the back of my mind. Like, dude, what if I had to go get a fucking job again? I've never ever even made a resume in my whole life. You know, when I got my first job, and that was the only corporate, that wasn't corporate, there's 10 people there. I don't even think people made resumes. People had to print them out. Right? So nobody was using email. So I always think about that, right? Like $500 a day keeps the cubicle away because at that point, I'm like, right? I don't got any skills. This is what I got. So always just important to, you know, just understand where you're trying to go with this stuff. Then it's just a matter of all this stuff, right? We got market recaps where I recap the trades every single day. Now, all my students get lifetime access, meaning there are certain things that go on in life. There's death, there's tax. Sunday, Tuesday, Wednesday, Thursday, I will be teaching class, and I will be teaching it with passion, and it's going to be amazing, right? Those are the 3 certainties of life, and maybe that your mama loves you, unless you don't got one of them type of moms. But then, that's it. So you get lifetime access. Markets are always ever changing. You know, one of the things is like my students, so this is like our boot camp is made through this. So we have a module system here. So I teach live, but everything's recorded, archived, all that fun stuff. Look at those muscles I have. Woo! No, I'm just kidding. But one of the things that'll happen is that, you know, our students, once they've accessed this module system, it's never ending. So they can register for the next class and the next class and the next class. And we've got a private forum where people can hang out. They can come in and this from years ago. December 2014, you know, whatever you need to do. And one of the things that will happen is as you guys, what you'll see is, hey, what you'll see is,
sucking in the inspiration, man.
Yeah, what you'll see is that as you guys are going through class, I'm also growing as a trader. From what I was in bootcamp 1 to, now we're in bootcamp 34, it's night and day. It's night and day because as the markets adapt, I'm adapting. Now, a good chunk of the patterns we trade are everlasting. Almost all of them are. But there's always nuances in terms of what works, what's hot right now. In certain markets, certain patterns are hot. In certain markets, certain setups are hot. Certain types of stocks are hot. And now with this cryptos, right, there's going to be certain types of cryptos that are hot, right? And so there's always stuff going on. So people always come in. I got students from 4 years ago that'll show up in class and say, hey, a lot of our students do guest webinars. I have so many successful students, and they come in and do guest webinars and hang out. And so we have everything just module-based in here, from every single scan you need to really basically everything you need to know about trading is on these pages. Now, in terms of, let's talk a little bit about trading, right? So, guys, and for any of you guys that need to talk to some of our old boot camp students, you want to get names, phone numbers, email addresses from some people that have taken in our boot camp. You got to remember that I've literally got tens of thousands of students. So, anything you need to know, I got it. So you let me know. If you want to chat with somebody from one of our boot camps, I will do it. But let's talk a little bit about fucking trading, right? So I want to talk a little bit. Let's talk a little bit about some trades, right? Let's talk a little bit about some trade. So a couple things I want to talk about. So let's talk a little bit about patterns, okay? So what a pattern is, it's a list of conditions that must trigger before a trade is taken, okay? So in terms of some trades, well, let's get down and dirty, right? Let's get down and dirty. So let's talk a little bit about some of these different patterns that we could trade. So, boom, 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 boom. Let's see what's going on. I'm just going to rip off some trades right from the stuff I call in the chat room. That way, woohoo! All right. All right, cool. So let's talk a little bit about true. Okay, true. Good. So anybody heard of Equifax, right? For those of you guys that are not familiar, Equifax is the company that's literally out there fucking you right now, right? So Equifax is this heinous company that has literally given out the social security numbers to every single adult male in this country. Well, they said their breach is 147 million people, which constitutes as every single adult working, male or female, in this country. There's social securities out there to fucking North Korean hackers, and then they hid it. Then even worse, then when they finally let you know that they did that, they said, hey, we'll put this free credit watch on your Equifax in case somebody steals your identity. We feel really bad about this. So then what happens is, when you to actually sign up for their credit watch, I don't know if you've seen this, there's a disclaimer on the bottom that says you cannot sue them if you sign up for their free credit watch. Yeah, it just came out in the news. They fucking put in the small print. So they have this thing on their website that said, put in your information to see if your identity was hacked. So everybody put in their information because everybody's identity was hacked. And once you put in the information, it comes in right in the bottom, says, by the way, by signing this and accepting it, you are saying that you will no longer, you're waiving your right to sue us. Fucking brilliant. Shady, but brilliant. So Equifax has this big drop, right? You guys see this? So Equifax has this big drop. Dude, it's super shady. It's super fucking, I can't even really talk about it because I'm so annoyed. So I already had somebody try to use my identity to get a fucking mortgage because it for so long. It's kind of, I've already had mine. People have already been trying to use it. Amazing. But that's the life in the fast lane. So, hold on one sec. I gotta just put out this alert for my crypto people. Hey, crypto sluts. I covered this ETH. Covered 260, 89. So I'm doing alerts all day. Not all day, but you know, I mean, I trade a lot, so you know, I got to put in the alerts for all this stuff. So my apologies, but I'm back. So, like I was saying, this Equifax had this big drop, right? So this particular day, trade in true. All right. So you guys, anybody ever heard of a sympathy play? Anybody ever heard of a sympathy play? So what a sympathy play is when one stock goes down, what you do is you end up taking something in the same sector, and you take something in the same sector and you find their next closest, I guess, competitor, you could call it, right? Competitor, you could call it. And what that will do is now you have something that you can play along with it. So what happened is when Equifax was doing all the shenanigans, I'm like, dude, what else is there? There's, besides Equifax, what's the other one? There's TransUnion, right? So when Equifax started going down, I'm like, man, this thing's gone down quite a bit. The next day, I'm like, fuck, man, probably people will take down this TransUnion. Okay, so, you know, you had this huge day, right? So what we're doing now is once Equifax is starting to go down, this is the simplest stuff. So now you can go in, but you can come in and play literally a sympathy for the same damn sector, which is pretty hot. And that's really the nature, guys, that's the nature of trading, is coming in. So how do you enter something like this? How would you enter something like this, right? So this day that Equifax is going down. So I'm going to show you this move because I use this literally all the time. So when you have a stock goes down huge the previous day, right? So it doesn't matter which one you're looking at. So when you have a stock that goes down the huge the previous day, all right? The next day, if it has a light move up, meaning it's like green, maybe 20, 30 cents, right? Meaning green, meaning it's up for the day, right? So what I'm saying is if it's green even a little bit, what'll often happen is when something's down big the previous day, if it opens up green, meaning it's up for the day, even a little bit, what will happen, guys, is as soon as it gives up its green, meaning it's, you know, say it's up 20 cents and now it goes down and it's into the red. So as soon as it goes red, minus 1 penny, that's when you short it. So it's called a green to red move. It's a second day play. So the parameters of this move is what? Well, number one, you need a stock that's down big the previous day, usually with news. Then the second day, you want this thing to go up just a little bit. Just a little bit. Because what happens is once it goes green, everybody thinks, okay, this thing's going to bounce. It's down a lot. But the thing is, in trading, when you think of something as being down a lot, that's not a reason to buy. If anything, that's the opposite reason to buy, right? And so what we need to be doing is thinking the complete opposite way. When something's down a lot and it's trending down, what we're doing that second day is waiting for it to roll back over. So as soon as it goes red, meaning it breaks under the previous day's close, we short this thing, and then we play down for the flush, right? And this is just a day trade setup, guys. You don't marry this, right? You're looking to take $2, $3, $4 or whatever the range will give you. Quick thing. So like in this particular, by the way, I could have made a lot more money on this. I made $850 on this thing, and I had 800 shares, so I could have made a lot more, right? I could have made probably a couple thousand, but I covered a little bit early, and I goofed it up. I goofed it up a little. So just something to kind of remember. So this green to red is very, very important. I do this type of trade literally all the time. So IRBT, same type of deal. I'm going to give you a couple of long trades to do also, but say IRBT. So on this particular date, on the 13th, that would be this day right here, this thing just got super shred. Anybody see that? So you got the super shred going on, right? And so now what's happening when you got the super shred is the next day, what's the average person think is going to happen? They're going to think that, well, it's cheaper now, let's buy it, right? Because every single stock has like their own little cult fans, little fanboys, or as they call them on the Instagram, little FUCK boys, right? Everybody's got little fanboys for these things, but they think it's going to bounce. But what we do, we see pop up the next day. See, like after, so it dropped what, $15 this day. Now I know a lot of you guys say, man, that's a really expensive stock. Like I don't like playing expensive stocks. Well, guess what? If you've got a small account, right, and you played 100 shares of this, and you were playing this in the setups I give you, say you play this bear flag or something, right? This is a classic trading pattern. So say you play this bear flag. All right, well, if you have 100 shares, you still have the potential to make $1,000, right? You use a little more. Say you got $3,000, $4,000 in your account, you can short 100 shares of this. That's $8,000 in buying power. Pretty cool, right? See, a lot of times people think that when you have a smaller account, you have to get with that $2 stock and try to have as many shares as possible. But that doesn't really matter. That's a misnomer. That's something that people use for chat room purposes, right? Like I'm going to pump up this stock to my followers. A $2 stock that goes to 210, there's no range for you to, you'd have to be perfect to capture that 5%, right? If you have a $10 range, how easy is it to have 50 shares even, or 100 shares, and trade along within this, right? I'm going to short some and cover some and short some and cover them. Before you know it, you know, you can make 20, so this thing dropped $15, but maybe over the course of the day, between all the different ups and downs, you can make $30 on it. Because because you have the range to actually be able to trade in and out, weave in and out of it, because you have room for error, right? Where if you had a 10-cent range, right, short and cover thousands of shares and be able to get in and out, you wouldn't. It would be impossible, right? And so that's where you've got to always kind of think about this stuff is like, you know, everybody wants to trade specific. Everybody wants the $2 stock that goes to $10. And, you know, at times we'll find those, and I made all my original money trading, you know, but there's just as much money as being open to trading anything with range. It's easier to have a $50 stock that goes to 54 and back to 52 and then up to 58 than try to trade something from 2 to 206 to 212 back to 202. You guys see what I'm getting at? right? And so this stock had this huge big range the previous day. Now the next day, look what happens. See, like it gapped up a little bit, right? Or it moved up a little bit at the open. So what happens is when it moves everybody, so after this big down day, everybody thinks it's cheap. So it moves up a little bit at the open. And then guess what? Oh, hot damn, right? Hot damn. So now what happens is once that bottom drops off, right, meaning that it can't hold green, meaning it's no longer up for the day. As soon as it starts to reverse and it goes red on the day, meaning it's not up anymore, $1, $2, 20 cents, 30 cents, but it's actually red, meaning this stock is down, and the only signal I'm looking for is a penny, but only if I see this setup. Is it down 1 penny? As soon as that happens, I hammer the short. Hammer the short, and now I'm playing this thing by, it goes red right around 85.24, right? So like you have all this thing. Even if you had 100 shares, you can make many hundreds of dollars. I had, I think 400 to 600 shares. I covered into this huge flush here. Now I could have shredded this for many more dollars, but that's the nature of my style of trading. Is I always take the quick money versus the all-day money. I don't know if it's a fault or a gift yet. I don't know if it's a fault or a gift yet. I always take the quick money versus the longer few dollars because I always think about bang for the buck. Okay, so I do the math in my head, and I always think about the bang for buck. So, for example, if I can make $3 on the downside by 10:30, or I could make $4, $4.50, $4, right? $4 of downside, but I'd have to sit at the computer till 3. What do you take? Well, for me, I take the $3, right? Even though I could make more money, I take the $3 always because I'd rather go out and do other stuff. You know that, but that's also you know a gift and a curse. A gift and a curse always has been because yeah, I'll never want to stay the full day. I mean that's just who I am. At my age, I'm trying to get in and out, and go and work on this bodice. No, I'm just kidding. I don't want to stay at the computer all day. So green to red, guys, is just a huge, huge thing. And by the way, you can do this for upside and downside. So, you know, we do this kind of move to the upside and downside. So, like, if you think about, like, when a stock has, like, a big push to the upside, you know, I do the same kind of setups. I do the same kind of setups on both long and short, right? So, you know, it doesn't really matter if it's, you know, this up or down. Green to red, red to green. These are both money makers. When you're trading, your money shows up in your account instantly. You know, I don't have any statistics, but I mean, for me, it shows up instantly. If you have a margin account, it's going to show up in like seconds. Oh yeah, no worries.
I'm still in your car.
Do it. Do it. So, and let me show you a couple examples of the opposite way, because I do this trade every day. And the reason look, there's better setups out there. There are better setups probably out there for some people, but this is something you do first thing in the morning. So look at this. Like, see, I keep examples of all my trades. The actual numbers are not updated, but so every single trade, these are all my different setups I do. See that? day long, tax loss selling, red to green. So dun, 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 dun. Oh yeah. The red to green. What's that song? I just ripped one on this Bazoom the other day. Hold on. There it is. Boom, 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 boom. Where'd it go? Dun, 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 dun. So same type of deal. So like you can see like this Labu, right? This is a stock I trade all the time. So you can see like this big rip that's first day, right? So you have this huge rip the previous day. So to see the next day how it opens up weak, it's actually so it's red on the day. So when you have something that's red on the day like that, what we're actually looking for the next day is something really, really, really quick, right? So if it's red on the day, I don't just buy it because that would be sucker. It could just keep going down. But once it goes green, meaning it's actually up on the day, what happens is everybody that thought it was going to go down is caught the other way. So now what happens is you go red and everybody's thinking short, and then you go green and now everybody's caught the other way, and now you're ripping to the upside, and now you have something that will squeeze $3, $4, $5. You can see this thing. So it goes green in about $70, right? In a handful of minutes, this is 30, 40 minutes, right? You're catching $3. Right, so like same type of deal. See, this is like previous day. So like this ALDX was up, right? This huge the previous day. Where does this thing go? Hold on, I forgot where that sucker go. I just saved this chart. Dun, 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 dun. So look at Netflix. So this thing had earnings just recently in July, right? So like this thing's up a lot, and it's got a flag pattern coming up. Now, you had like a nice day the previous day, and then see like how it just gapped down and just kind of busted down real quick, right at. Once it goes down like that, it goes green, meaning it's red for the day, and it goes green. So it's down 20, 30, 40 cents, maybe even $1, but it goes green, meaning it's actually up. Now what happens is, dude, you're in for a shred lifestyle because now you can play this thing back to the upside. Now, I know a lot of you guys, once again, you can do this on $2 stocks, $3 stocks. It doesn't really matter. You know, you'll see them on most of the biggest ones I've ever had have been on smaller cap stocks, but you can do them on any kind of stock possible. You can see even today, like this stock was down 4 or 5 days in a row, so it was ready to bounce. Opened up red, goes green, right? And you got, boom, 80 cents out of this thing. You know, so you'll see that kind of action even on the small cap stocks. Dun, 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 dun. Check this out. So like this HMNY, this is a small cap stock that a lot of my students have been playing. Right? So like this thing went from $3.50. And see these flag patterns here? You can play all these. So this is a flag pattern. You can play these to the upside. So this thing ran from $3.50 to $7, right? Imagine if you had 1,000 shares of this, right? Tons of money. So now check this out. So, hey, Shrin, I actually do trade futures every day. I'll get into it in a hot second because I use the same patterns for stocks and futures. There's really not any difference in them in terms of the pattern. So, like this HMNY cruises up to $6. So it's up 100%. So when I see a percent, I do one thing, right? Which is the first thing I'm looking for is, does it have a light dip at the open? So see how it closed at 573? And it busts down to 550. So it goes red on the day. Goes red on the day. Soon as this thing goes green, you're long this thing. And you put your stop down over here so you can risk 20 cents. So if you have 2,000 shares, you'll have $400 of risk. If you have 1,000 shares, $200 of risk. I use 9 EMA 28 VWAP, but they don't have to be in a particular order for this particular setup, right? So once it goes green, now you're buying, putting your stop under, and this is supposed to be a quick trade, right? So you're catching the shred. You're trying to catch the shred very, very quickly. Selling out of these things is, a whole nother class, but it is a beauty, right? So that's where I want you to kind of get used to these things. Dudes, this is my favorite pattern for a particular reason. Not because it's the most successful or anything like that. It's nothing like that. What I like about it is that it's quick. I want to find stuff. I don't want to trade all day, right? So I resonate with this pattern because it allows me to get in and out of stocks very quickly, and that's what I'm all about, right? Because I don't want to do this all day. I hope you guys don't either, right? Fuck. Live your lives. Get married. Have children. They say Western population, people are having like one child a family. How are we going to take care of the terrorists without more children, right? We got to make some babies. I probably need to throw out a few, then find out who they are too. But that's what we got to do with our free time. So guess what? Don't trade all day. It ain't that fun. I mean, it's fun, but it ain't fun. Bottom on what type of setup, Miss Jules? How you doing, by the way? You let me know, and I will find you the bottom. The juicy bottom. Now, let's talk a little bit about swing trading. So this is a day trade setup. You can do this to the upside and downside. Let's talk about swing trading. Does anybody know what swing trading is? So swing trading is holding stocks overnight for multiple days. Good. Holding stocks overnight for multiple days. Hey, Garrett, I appreciate you, brother. I appreciate you for listening to me ramble a little bit on a good Thursday night. I know there's football on, but frankly, who the fuck would want to watch the Packers, right? I'm from Detroit, baby. It's Lions all the way. So swing trading, so we spend 5 classes on swing trading. So one of my favorite patterns, only in a bull market does this work though. I wouldn't do this in a non-bull market. My favorite type of pattern is what's called a flat top breakout. It's the simplest pattern, okay? So what a flat top breakout is when you get a trending stock. So I want stocks that are up at least 20, 30% for the year, all right? So I want stocks that are up 30% up for the year. So I want to see momentum. And trading, momentum begats more momentum. Okay? Always remember that. Momentum begats more momentum. When you think a stock is up too much, it's going to go up even more. I've seen it a million times. Anytime I've ever thought, man, this stock is going up too much, guess what it does? It doubles. And guess what? Anytime you think a stock's gone down too much, what's it going to do? Probably going to go down. I've lost so much money and blown up so much accounts buying stocks as I thought they were cheap. Because you know what cheap happens? Cheap becomes more cheap. Why is something cheap? Because it's a big, gigantic turd. You know how I know it's a big, gigantic turd? Because it goes down. Let me tell you something. I got a student of mine. He blew up literally, and he's rich, so I don't feel that bad for him. I don't feel too bad for him. But he's loaded. But he blew up literally $1 million on this fucking BlackBerry. So he's a Canadian gent. He's like old money, Toronto, you know, lifestyle. His fucking brother's probably a Mountie, and his dad probably plays for the Maple Leafs. Who knows? But, you know, so he was in my mentorship group. I worked with him for a little bit of time, many a moons ago. And awesome guy. We're like good friends today because, you know, the $1 million didn't matter much. But so in Canada, what do you got going on? You got a nice looking prime minister. He's very handsome. He's got great hair. You have maple syrup, and you have BlackBerry, right? These are like your three big things, right? And so, and Canadian bacon. Canadian bacon is nice. So you got these three things. Now, what goes down is, you know, he's thinking like, because he's from Canada, he knows this company. He's like, dude, this company, dude, everybody uses BlackBerry, right? We're all like BlackBerry messaging each other. BlackBerry's huge. So this thing was at this time I'm doing Skype lessons. Now I don't know anything about the politics. I just know he's got nice hair, Mr. Tom. All I know is he's got really good nice hair. That's all I know. But he's like, man, this is a BlackBerry. So this thing was at literally like $120, $120. At $100, he's like, dude, should I buy some? I'm like, I don't know, man. This thing's going down a lot. And let me show you on here. So I'm like, I don't know. Like, this thing's going down a lot. So every day, he just asks me, should I buy some of this, man? This is a BlackBerry. This is Canada's finest. I'm like, dude, I thought Patrick Waugh was your finest. It's like, no, besides that. Right? And so, like, every day he just asks me. And I'm like, I don't know. And, you know, this thing, it never stopped going down, right? It got down to, you know, in the singles. But, you know, lo and behold, like many a moons later, he's like, dude. So I worked with him while he was kind of playing it this way. And everything was going down this time. But the thing is, you know, it kind of leveled out a little bit. And so he's like, oh, man, it's back. So he started buying it back. So he got smoked here. And he started buying it back, thinking, well, it's half the price. And this thing just kept going down and down and down and down and down and down. Cost him $1 million. Hot damn, right? I mean, that's fuck. Like, I think about it all the time. And sometimes we laugh about it now. I'm like, dude, do they even make any phones anymore? He's like, I don't really know, man. I got an iPhone. Right? So nobody really, you know, you don't want to buy anything because it's just cheap. That's just not going to be a good look. And you can see it even now, even though it's been going up, it's still only in the single digits, right? So, you know, always think about that. Cheap begets more cheap. So, like I was telling you, so let's talk a little bit about this flat top breakout. Yeah. This is like my bread and butter trade. So, what happens is when a stock is trending and it goes sideways for a period of time, I need it to test 3 times a level of resistance. meaning I wanted to go sideways and build a range at the top. I wanted to go sideways and build a range at the top. The reason I needed to do that is that stocks, they're like a pressure cooker, okay? You ever notice why something goes up or just can't break out? You ever wonder why it can't break out? Not enough pressure has built. So when you think of stocks, you have to think of supply and demand. When there's a lid on a stock, meaning it's something is holding it down, what happens is every time it tests that level, you're building up the pressure cooker, right? You're building up the pressure cooker. So when you tap it, you're building up energy. Then you tap it again, and you're building up energy. And you tap it again, you're building up energy. But what happens is, it's like a door. You're knocking on that damn door. So you tap it, and then you tap it, and then you tap it again. So you hit it once. You hit it twice. You hit it 3 times. You're literally hitting this thing with a hammer. You're hitting it with a hammer of buyers. Hitting it with a hammer of buyers, weakening that door. And you need always 3. Anything other than 3 or more. If it's 2 taps are for losers. Always remember that. Remember this for the rest of your life. 2 taps are for losers. You buy something at resistance, it's a second tap, you will lose. And not only that, you will anoint yourself a loser. That's from Montreal, French Canadian. Right? So tap, tap, tap. Now, I use 9, 20, 50, and 200 averages. These are all simples and these are 9s. Anytime you see a flat top breakout, you 9 EMA curling up under it, right? So that when it breaks, you can put your stop right on the 9 EMA and limit your risk. So rather than having a $4 or $5 stop, right, you put it right up your 9 EMA, and now you're ready to go. Your 9 EMA will help provide demand, but it will also help you manage your risk. And that's what it's all about, right? It's how do I get the most reward with risking the least amount of money possible, right? You go to work, hopefully, unless you're in Europe, then you get a nice stipend to hang out at cafes. I just spent the last month in Spain, and I can assure you that they are the most beautiful people in the world, and part of it is that nobody's got anything to do. You can go to a cafe at 12 o'clock and people are just drinking wine, hanging out. But the beauty is that the market doesn't even open until 3:30. I had the best month ever because I'm just hanging. It was awesome. But for the rest of you guys, you got stuff to do. So you want to always manage your risk. Always manage your risk. So when you see the breakout, even on intraday trading, when you see the breakout, if your 9 EMA is curling up under, we call it the curls for the girls, right? Your 9 EMA comes up under it. Now you have a way to limit your risk and also provide demand. Boom. Now you've got a low risk trade with high probability, but most importantly, high reward, right? And that's where we want to go with these things. Boom, 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 boom. This is one of my best swing trades I've done of this year. So hold on here. So check out this Shopzilla. Anybody ever use Shopify? Never. This is a Canadian company too. So test. So these tests don't work. Why? Does anybody know why these? When you test resistance, this is the 3rd test, right? Why can't this work here? Does anybody know? Like, why wouldn't this, if it hit this level here, it's the 3rd test, why couldn't it break out? Anybody know? Oh, yeah. Very interesting. Why? Look how far your 9 EMA is. 9 EMA is at 42, and the price is at 45. That's not tight. Guys, if it ain't tight, it ain't right. Just like getting a haircut. I only say that because I'm bald and I have no hair, but that makes me an expert on the tight and right. If it ain't tight, It ain't right. So if your 9 EMA is down here, is your pattern tight? Are you getting the curls for the girls? Right? Remember what I just said? The curls for the girls. Get the curls for the girls if the 9 EMA is $3 away. You ain't got shit. This test, does this one work? Can you buy it here? Look, it actually peaked over the level. See this? Has anybody raised your hands bought a breakout that failed? I'll tell you why it failed. One of the reasons. See this one? It broke out. Why didn't it work? Why did that breakout work? Because it wasn't a real breakout. That's the breakout where all the suckers bought. It had been up 1, 2, 3, 4, 5 days in a row. But look where its 9 EMA is. $42. That ain't no curls for the girls. That ain't tight and right. No, no, no. Patterns get their power from consolidations and bases. Patterns get their power from consolidations and bases. The tighter the pattern, the more power it has and the less risk it has. Remember this for the rest of your life. If it ain't tight, it ain't right. So guess what? Now look, when it finally breaks, where's your 9 EMA when it breaks, the day it breaks? 44.54. At 45. I know not all you guys are Indians, but there are a lot of Indians in this place. So you guys are good at math. I don't want you to comment. But for the rest of us normal people, if you buy a 45 and your risk is to 44.50, is that tight? Is that an acceptable risk for you? Yeah, that's like, what is that, like 1%? 2%? I don't even know. Let's go with 1, right? So now we're talking, guys, because 50 cents on the 40 up, that's tight. That's right. And that's an acceptable risk. But now, more than the risk, right? Because we're not just fucking bean counters always thinking about risk, risk, risk. We're here to fucking make money, right? Well, tight and right also gives power. It gives explosion. And we want to look for scenarios in stocks where we have explosion. And so when you have a hot pattern like a flat top breakout, and you get the 9 EMA crusting up under it, it's providing demand. And it can provide the explosion you need so that you can make good money quickly. And that's why when it goes here, you got no risk, and now you are off to the races. And that's a multi-day trade for those of you guys that are working. I do this trade all the time. I know how to find them. I know how to trade them. But in the end, it ain't that complicated. I want a stock that's up for 20% or more for the year. I want it to go sideways. I want 3 tests. I want my 9 EMA up under it. Now we're ready to go. Then, of course, there's some small factors in it, like float, short interest, and some other small details, but that's the juice, right? That's something to get excited about. I've been trading this pattern since I had hair like fucking Bradley Cooper. Hot damn. Think about that. These things don't die. Trading has been the same since the beginning of time. Sure, there are times and places where things change. But in the end, all trading is always been throughout, since I've known in the last 17 years, explosion, consolidation, tight risk, and looking for inflection points where stocks can explode. And that's the ball game. I'm going to open this thing up to some questions. And boom. As always, it's been a pleasure. It's been fun. It's been fantastic. It's been huge. It's been huge. I love it. I don't know Putin. I don't know Putin. It's been amazing. It's been huge. But some questions. And guys, I look forward to seeing you guys in class. We have payment plans for boot camp. You guys get access to the chat room to watch me on video. I do all that fun stuff. You guys have my phone number. I'll be honest, I probably wouldn't even know if you were one of my students or not. So if you text me or call me, I'm going to pick up anyways because I don't save anybody's number. So I have trading. Some brokers will cost $5 a trade. Some will cost $6 a trade. I have a place that most of my students trade at. It'll cost 27 cents for 100 shares, 50 cents for 200 shares, 75 cents for 300 shares, so on and so forth. So if you want to trade 10 shares at a time, it'll cost you 2 pennies. That way you can get in and out as many times as you want. It's huge. All right, let's get into some questions. Mr. Chris Jimenez, sorry. Yes, I use 5-minute charts. Dun, 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 dun. Hey, Jeremy, by the way, send me a text or something, man. Let's get together. Stefano, how you doing, brother? Good to see ya. Hey, Harsh, yeah, set something up. Guys, if you go to my website, your information here, and that's the easiest way to kind of set up. So we have on your free trader assessment. So you come in here, put in your name, phone number. Somebody will call you, or they'll set you up with me, and dude, we will go in and make sure that you're well taken care of. And by the way, I've had literally thousands of students. I will give you, you can talk to any single one of them. Nobody said nothing bad about me. I'm lovable. No, I'm just kidding. I'm kind of lovable. Hey, Srini, by the way, futures and stocks are similar, but futures can be really choppy, man. Stocks, I like trading futures because of the leverage, but I often find that the leverage is a hindrance because futures are a little bit choppy sometimes. Some days you get the awesome flushes in the trend days, but the thing is, like with stocks, is that even the days that you don't have trends in the market, there'll be trends in individual stocks, and that's one of the reasons why I always trade stocks. But for me, Forex is right now has been like those multi-level marketing companies, and dude, it's such a scam. You ever trade at a Forex broker? You put in an order and like the price jumps around, like the ask and stuff. I trade cryptocurrency. It's easier because there's no hedge funds in it yet. There's no real algos. So the cryptos, if you want cryptocurrencies, is a little bit easier. Hey, so market reversals. Hey, Scott. So, guys, Scott's asking, what's the best for market reversals? I use the general indexes, to be honest. So I'm not staring at them all day, but one of the things you'll see me on the top of, where I keep my list, I got the Dow Jones, NASDAQ, S&P. So I don't even need the charts because I find like if you just stare at the index charts, you get in and out too much of your trades thinking you see something in the market when you don't, And so what I try to do is come up here so I can see like, okay, these things are taking a turn or not. and that'll help me. And then, yeah, I've got gold, silver, the VX and all that there. But I won't sit there and stare at it and then time all my trades with the market. If the market is green or the market's in an uptrend, dude, I just shred. But if the market rolls over and it's like just having a big down day, then obviously you don't want to hold too many longs. Garrett, I use TC2000 for pretty much everything, scanning, watch lists, news, scans, everything. I use TC2000. But the one thing I do is I also keep on one screen just, this is Medved Trader. I don't need it. It's actually not really even worth it. But so the story behind it, it's stupid. But so 10 years ago, I started using this program called Quote Tracker. And at the time, Quote Tracker looked like this, but not as colorful. And there was nothing like it. And it was free for Ameritrade customers. And, you know, they had this thing. And so I used it for like 10 years. And they never even updated it. It was kind of a, you know, they didn't have much going on. But I got so used to it, like my eyes did, that when Quote Tracker changed to, you know, so they shut down Quote Tracker. Ameritrade even told me, like, they will not, it's not going to be even protected anymore, you know, in terms of security. I still fucking use Quote Tracker, even though, like, it wasn't getting supported or whatever. Oh, man, look at this little, the little symbol. This thing was for years I used this thing, you know, and so, fuck, they haven't really updated forever. So when I use this Medved as just to kind of look at the stuff, but it's not necessarily for scanning or anything. I just use it to keep an eye on the numbers, if that makes sense. I don't know. It's just when you use something for so long. So I use 4 monitors. So I have, see, with TC2000, it's what you do. See this? You can float. So, like, I can take this, for example, and drag it to another monitor. So I have TC2000 on all my other monitors, but my main, like, kind of just to watch my list, I like to use the Medved. But you can make your TC2000 look list like this. So I have actually on my TC2000, see, you can make it look in list worthy, and then you can, like, move things up and down. But something with the colors, I got Coke bottle glasses. Does that make sense? I feel really bad giving you such a shady answer. Hey, Cindy Tom, most of my homework is done at night in pre-market. I have very, very little need to run scans during the day. For example, I'll give you a statistic. In the last 29 days of trading, I've been up over $1,000 in the first 15 minutes, like 23 of those days. Now, I haven't kept that $1,000 because a lot of times I keep trading, and, you know, sometimes I give it back, some of it back, but I always shred in the morning. So I'm not really around much to run scans during the middle of the day, and I'll tell you why I don't do it. So I have scans going that I can run. I don't do it that often. Why? If you do, so say you want to make, what's your goal? Say you want to make $5,000 a day. My goal is $1,000 to $2,000, but say you want to, let's give a lofty goal, okay? How many stocks do you need to trade to make $5,000? Maybe 1 or 2, right? Hit it hard. So you only need so many ideas. If you do your homework at night, you're already going to have more than enough ideas if you do your homework right. Now, in the pre-market, I'll run some scans for new news, the new news. So that'll give me some extra plays. Other than that, right, if I have 3 or 4 awesome plays ready to go, and it's just more a matter of stalking them and making sure I have profits and exits and all that, right? Well, when I start to run scans, like say I'm running my liquid gainer scan, for example, and I'm running this scan, Well, now I'm staring at this, right? And so I have like these hot stocks that are ready to go now. And now I'm sitting there staring at my scans, like looking for new. Sometimes you will get new stuff. Like this would have been an awesome trade. I saw this on the scans, but I already had more than enough stocks to take. So you can run scans, and so I like to run scans. See this? So 9:30 to 9:45, I'll hunt for XYZ play. 9:45, I run my top loser scan. 10:45, I run a Momo scan. If I trade till lunch, I'll run a consolidation scan. But most days, if my list is hot and my homework is done, then it's done, right? So that's something I always kind of keep at the back of your mind is if you do your work right the way I teach you, you won't need to run scanning. So I'm going to show you how, but all I'm saying is that you don't need to. But I've got them. So I keep this on the new list, and I can have these things streaming and going. Oh, man. So 9:35. Okay, Brian, I got you, brother. I traded NVIDIA today after 9:35 at the break over VWAP. The reasons a gap down, washed out, regained VWAP at 9:34, candle tested, held at the beginning of 9:35, then it fell out, found support. Oh, man. Okay, I got you. Then spiked our... Brian, you might be a little bit too in tuned with just a minute-by-minute kind of basis of it. So hold on. So I entered at 9:35. So that would have been here. So you can't really enter it here because it doesn't have a pattern yet, right? So you don't have anything yet. It's just one candle. One candle doesn't make a pattern. Yeah, it's going to bounce. But once again, are you really in the game to catch this 20, 30 cents? Doesn't really matter. But one candle doesn't make a pattern necessarily. Because how do you know whether to buy here, 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 here? And then look, it gets shredded. Like when this thing broke here, I ended up shorting it, right? So, because the gap down tells you the trend for at least that morning. So you can't really, I can't even think about necessarily longing it just yet either. But also, you got a lot of action for basically the first two candles of the day where you're really not necessarily needing to do anything. I usually wait a couple, 3 candles. Hey, Bruce, how you doing? How do you scale out to winning trades? Good. So if you've got a trender, say you got a trender. I just follow the 9 EMA. I'll follow 9 EMA and kind of scale out into spikes and just keep a lotto for the 9 EMA. Now, this is like your perfect world, right? How fucking that happen? Right? That's not going to happen very often. So in those particular cases, then it's like, okay, we're taking spikes. I like to put my stop at the buy price, and then I see if it can keep going, and I may re-add some as it sets up again. But, I'm always selling a half or a third, putting my stop at the buy price, and then I let it become a lotto trade. And, of course, there's some other aspects of things in terms of, I use Bruce, and I don't want to shortcut you because it's such a long subject, but I use a reasons to sell list. So I keep a dynamic reasons to sell list. So I think of like, what are some different reasons that I may sell a stock, right? Hold on one second. So I think of like reasons that I may sell a stock, right? So like one of them could be it hits its target. Another one could be that it got a hit resistance. Another one could be that it got it too extended. Another one could be that it broke under its moving averages. Another one could be that it broke higher highs, higher lows, right? And so, you know, those are all kind of different spots of things, you know, that you got to think about. And when you're thinking about, you know, trading and selling things, we'll get you there, that's for sure. But those are some of the different things that I personally would think about, you know, is what are the different reasons I may sell a stock. Hey, Darkshot, you know what? I'll reach out to you in the crypto chat. We'll figure something out. I'm not too worried about it. Hey, Harsh, I know who you are. Hey, Ronit, yeah, I mean, most of my family still lives in India, and I mean, they use this type of stuff. I mean, all my family's taken the boot camp. The one thing with the Indian markets is there's a little bit less liquidity in certain types of stocks, so you just have to be always mindful of, like, you have to just be mindful of the liquidity and stuff as a swing trade, day trade, but for sure. The other thing is, you know, when you're over there, dude, you can trade the Hong Kong markets, the fucking Chinese markets, you know, all that stuff. Hey, Harsh, by the way, there's not really necessarily an ROI difference. So guys, Harsh is asking, like, essentially what makes more money? Forex, stocks. Stocks is the greatest game in town, right? So if you think about it this way, Harsh, how I always think about it, who trades Forex? What they do is they say, if you have $100, you can open an account. We'll give you 50-to-1 margin. Right? They all say that. If you do this, you can make 50 pips. You got these robo pips. Right? There's always some fucking weird scam going on in Forex. Let me ask you, does Warren Buffett trade fucking Forex? Right? You know, if you think about the big time just traders, you think they're farting around for pips, you know, with their, you know, unlimited margin. Forex is a little bit, for me, it's boring too. I know how to trade it. I follow I follow some lists for Forex and stuff, and I know how to trade it. It's fucking easy. But like, you don't always move, you know, and so that's where you know, it's it's tradable, but it's just the least on the totem pole for me. You know, it's just like, yeah, what are you gonna do with this? Some days you'll get this kind of drop, but even this is super minimal, right? It's like a 0.2%, so you got to leverage up. At 0.2%, you got to leverage up 50-to-1 to get 5%, but that's a lot of risk. Hey, Chris. So Chris is asking, why do you use the 20 or the 50? Chris, you can use the 50. The reason I use the 20 is because I'm a short-term trader, so I want short-term moving averages. Does that make sense? Right? So like, say the 50 and stuff will come into play like at lunch or later in the day, where your 9 and 20 are going to come into play fairly quickly in the market. I want to trade the mornings, right? I want to be known as the morning trader, you know? So I'm not looking to really trade into the afternoon, so you could totally use 50. A lot of my students do. It's something, you know, that it's just easy to add on. And I actually use, so Chris, by the way, I use 50 EMA for my cryptos. So I used it for cryptocurrency. I just don't use it for stocks. Let me show you. So like if you see, for cryptos, I got 50 AMAs, right? So I think it's worthwhile for sure, but I just don't use it for. I don't use it for the I don't use it for the socks. I usually don't stay that late into the day. Hey, Srini, so I've got 3 students currently in Singapore. Vikas is one of my good students. He lives in Singapore. And then, dude, his name is Harsh, another Indian guy. He's an Indian guy. He's actually a doctor in Singapore. I got students in Singapore. I'll hook you up with them. Dude, you guys, I can't imagine Singapore's that big of a place. You guys could just have a fucking brown people party over there. Hey, Cindy, Tom, Gunther, Cindy and Tom, hello. So the question is, what do I look for to tell you it's not a total failure? You don't know. When it dips down, you don't know. I don't buy it on the dip. I only buy it when it reverses and goes green, right? And that's how I know that it's reversed. I wait for that confirmation. Hey, TC2000 does have a broker, but like I have my own hedge fund essentially. So this platform that you guys saw that a lot of my students trade on, right here, I own this. So, hold on here. So like this thing here, this here is called app trade. So do this is fast. I've got all the buttons here. So it's like, boom, if I want to buy 300, I hit this. If I want to hit short on 300, I hit this. I want to liquidate my longs, I hit this. I've got, it all set up. So I got 150 students trading on this. There's no pattern day trade rule. It costs $2,500 to open up an account. In terms of the educational packages, I give everybody access to margin. So you get access to $15,000 per position in buying power. We don't call it margin because it's just buying power. And then my students that are profitable, I give them more and more buying power every week. So say you're profitable, I say I might take you from 15,000 to 20,000 per position on me in terms of the risk of the buying power. Profitable again, I might take 25. I have some students trading $100,000, $200,000 in capital, and it's on a per share basis, 27 cents per 100 shares. It's a pretty cool thing. I made this myself because I was looking for so many brokers to kind of. You ever notice with brokers, you can never get exactly what you want, right? There's like always that kind of aspect of things with the brokers. Like you never get exactly what you want. So then I just ended up making my own platform. Dun, 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 dun. Let me see here. Who else we got? Hold on. All right. Can you? Question is, how many times can you take the boot camp? It's unlimited. I have students right now that are even in this current, webinar right now, and they're here paying their respects. My students have lifetime access to things. I've had 2 students come and stay at my house that took boot camp 4 years ago. They come in, and when they're hanging out with their family or on vacation, they come and stay here. I don't like limiting it because, guys, so I'll be honest with you, this is the hardest game in town. Hardest game in town. Why is it the hardest game in town? Does anybody know? Because it's up to you. You've got to go out and click the buttons, right? You've got to go out. You can't blame your boss. In life right now, you have a shitty boss probably, right? Or you have this or that. Nobody blaming trading but yourself. It's hard. The trading itself is not hard, but when you can only blame yourself, it's hard. So awesome, because you don't have your annoying neighbor screwing you over for your promotion, right, in your cubicle. You know, your boss telling you got to wait your turn. There's nothing worse in life than the words, wait your turn. Be patient. It's the worst terminology, wait your turn. I hate that. There's nothing worse than that. You can't do this. Wait your turn. Your time will come. All bullshit. Your time may never come. You can work as hard as you want and your time may never come unless you go and make it come, right? And that's the way. The beauty of trading is that it's hard, but your time comes when you want it, when you're ready to make it come. You know, and that's what makes it cool. It's hard, but the patterns aren't hard. The nuances aren't hard. You know, yeah, you have to study and do stuff, but you guys already do that, right? And the thing is, like, yeah, you have to be disciplined. Well, you're already disciplined, right? Take care of kids, pay your mortgage, drop your kids off to school, teach them good stuff, be nice to your wife, try to remember her birthdays. That's all discipline, right? If you're disciplined in one thing, you can be disciplined in this. You know, it's just a matter of going now in, doing it. And that's where I come in, man. I'm a really good trader. I'm a world-class teacher of traders because I like doing it. You know, I like doing it. I like people harassing me. No EMA, Cindy Tom, just price. But you want to make sure it's not too extended. Dark Shot, I wish I had my own platform for cryptos too, but I can't figure this shit out for the life of me sometimes. There's so much rules and, not rules, but, you know, Dark Shot, the problem I'm finding is the security, right? So there's all these hacks and stuff, and, man, you know, I don't know if I could secure it. I just don't know enough about it, right? I don't even know. You'd have to hire freaking hacker experts. Then you always read those news like the fucking Rocket Man, aka North Korea, right? They're sending their hackers after the crypto places. I don't know. I don't think I can be responsible for it because I just don't know enough about it. What size account do you need to earn $1,000 a day? Probably between 10,000 to 50,000, depending on skill. A good trader could do it with 10,000 in leverage. A mediocre trader would need 30 to 40. With no leverage. A mediocre trader shouldn't use much leverage. A world-class trader can use as much leverage as they need because they're world-class. So a world-class trader probably needs about 10. I could maybe even do it with 5 if I had enough leverage. Maybe not 5, but a lot of days I could. A mediocre trader, maybe 30 to 40 to get to 1,000. To make $100 a day, I mean, you know, even a basic trader can do it with $2,500 if they're disciplined, because we give them access to margin, buying power, meaning 15,000 per position buying power. You could do it. And you'd have way bigger days. I mean, you'd have $500 days, $400 days, but I'm just talking about average. Hey, Robert, man, I appreciate it. A best piece of advice I can give a new trader. Don't jump around. So what does that mean? Well, what I mean by that is, and this happens in anything in mentorship or entrepreneurship, people jump around like kind of guru to guru or style to style, type of trading, the type of trading, or type of business, the type of business. They just want to be entrepreneurs. So I was like that. I sold these Cutco knives for a while. And I went from Cutco knives to Amway, where I was selling, the toilet paper and stuff. I was all in college when I was doing this. And then I did this thing where I was selling the door-to-door phone service and then getting the residuals from jump to thing. Somebody would be like, dude, there's a hot thing like this. People are making money. I'd be like, ooh, I got to do this, right? And, I would have probably sold makeup or fucking face creams. I would have tried this trading, that trading. I tried day trading, swing trading, options, Forex, the Hong Kong market, fucking China. You just jump around, always thinking there's something else out there. It's called the hunt for information. People think that often, people always think they need more information to be successful. I need more information. That the reason I don't have what I have is that I need more information. So they join more chat rooms or they take more classes. It's never about information. You can take a standard amount of information in trading that gets you to one or two awesome setups and being able to execute them. And then guess what? You've got to just go out and do that, right? And so there's not the hunt. To skip around is so counterproductive because it's always a game of repetitions. Repetitions. How many repetitions can I do in this pattern or this style? How many times can I do this morning routine? And once you get into the hundreds of repetitions, you feel great. You're like, man, I've got this. Like, I feel pretty good about it. And once you get to the thousands of repetitions, you're doing it really without even thinking about it. You're like, okay, I've got this. Like, whoa, I'm seeing all the angles. And then when you get into the tens of thousands or hundreds of thousands of repetitions, you're in the fucking matrix, right? You're like, right? But how do you get there if you're just always on the hunt for information, right? Like you're missing something. You're not missing anything, right? You have something, learn it, practice it, and become awesome at it. As long as you're learning from the right spots, right? Which is, of course, you've got to determine where's the right spot. Where's the right spot? That's going to be the biggest thing. So that's advice I give you, is just to really hack at it and think about the repetitions. Did I give myself a chance to do this thousands of times? Anybody else got any questions? Speak now, favorite holds your peace. Go once. I wouldn't really trade EMD. Some people ask me about it in the morning. I told my students not to trade it. There's no pattern here on the daily, right? So it's not in a trend. It's just sitting in range. So really till it kind of breaks over. Harsh, man, did you not just go through this, man? I already told you guys the whole story of Forex. You got to rewind the tape, baby. But that's a no. I mean, I know how to. It's easy, but. Right? This thing's in a range. Look at today. It gapped up on news and just faded off. This thing's I wouldn't say it's a turd because it's gone up 800%. So it's a trender in a bigger picture. But on a short-term picture, right, it's just stuck in a range. So till this range breaks, you don't really have anything. It's just kind of farting around. It's what they call it in trading? It's the penis in between us. This stuff. That's probably bad. Hey, we short stocks on bad news, good news all the time, all the time. But we use still chart patterns because I got to manage my risk. See, chart patterns is not just about entries. It's really very minimal to do with entries versus it has everything to do with managing risk, right? Risk, looking for inflection points, all that stuff. Main difference between crypto trading, stock trading is more liquidity. You can see the thing is in cryptos, you can wait 3-4 days and there's no volume. In stock trading, you get this in a couple minutes sometimes, right? There's just more volume. There's more people trading it. You can trade more size. So Darksha, you're in the crypto, our crypto chat, right? So like for example, I trade ETH, right? I buy 20 shares of it. Well, in stock trading, if I had the same setup, I would trade 1,000 shares of it. Why? Because there's more liquidity. You can just get it out. Like a couple days ago, I had 1,000 shares of this, right? So it goes up to 60, 62, then a 65, and then I bought 1,000 down here, right? And it goes up, boom. You can't do that with cryptos because they don't have the liquidity yet. You got to trade kind of 20, 30, 40 shares of stuff. You know what I mean? You couldn't buy 1,000 shares ETH and get in and out easy. And the other part is the commission. The other part is and the reason this happens is I love crypto trading because I love the ranges. But see, because stocks have set hours, you get those like big morning pushes really, really quickly. And then you can just say, I'm going to trade 2 hours a day. And, you get that morning push. You don't necessarily get that in the cryptos because it trades 24/7. So it's like, there's days it goes up. There's times it goes up or down, but it's like continuously just kind of, right, doing what it does. Where stocks, because they have the set hours, you get the first 15 minutes, you get always these kind of, big spikes, and you can be done for the day. But cryptos have more range on a daily basis, but because it's spread over 24 hours, right, it just feels different. And then the liquidity. You can get in and out so easy. And also the commission. Say I want to do $5,000 worth of ETH. And I want to market order $5,000 worth of ETH. Okay? $20 on GDAX. It's fucking huge. The commissions are huge. Where in stock trading, $5,000 worth of shares could cost you 10 to 20 cents. Max. Less sometimes. Right? Because it's done by per share. So you're talking about a whole different ballgame in terms of the commissions too. Chris, yes, I have the float number in the corner on all my. It's not hard to master both, Darksha, because I think that they like one overrolls into the other for sure. Like I think I'm getting better, but I'm pretty good at trading cryptos because I know how to trade stocks. You know what I mean? So Chris, what I was saying is I keep the float in the corner out of all my trades because I've noticed that some of the big runners and the easier movers I trade, I have less than 100 million share float. Stocks that have over that tend to kind of grind a little bit. Not that you can't trade them, like Amazon, NVIDIA. A lot of stocks I do trade have over 100 million share float, but some of those big runners, they have, what's it called? They have under 100 million. Cool. Anybody else? Speak now, forever hold your peace. All right, well, it's been real. Cindy, Tom, I don't know. No options for me, man. They're so fucking hard to. All the math just confuses me. The thing, guys, is look, you don't have to trade 10 different things in trading. If you master one, you can make more money you could spend, right? You do the other ones for fun. You don't need all this stuff. Mr. Christoph, I actually use limit orders and stocks for almost everything I do. Unless, look, some of the stocks, like, so say you're trading a high float stock, there's no spread. So if there's no spread, I can go market order because it's not going to cost me anything and it saves me time. But like some stocks, if you have a 20, like say Tesla, has 30, 40 cent spread, I mean, you don't want to just do market orders because of, you don't want to do market orders because you'll have the spread. You'll have to pay for it. Books to remember. Hold on. Let me grab my iPad. What the fuck? Hold on. Man, I can't find my iPad anywhere. Let me see what I got on the iBooks. Hold on. Books to... Ooh, hey, I really like this book by Tim Ferriss called The Tools of the Titans. It's like a series of podcast transcripts of like millionaires and billionaires. I think that's actually really good for trading because it's just good about, yeah, it's just good about life stuff. Man, trading books all suck. I've got so many of them here. I've literally read hundreds of fucking trading books. Hey, this is a great. So I don't know if I don't have anybody in Texas A&M. I think I got somebody by Texas Tech in Lubbock. Is that close? Fuck, man, middle of Texas is. So everything's 10 hours apart. All right, this book by Josh Waitzkin, The Art of Learning. That's actually really good for trading. The Art of Learning. I really like this book by this Indian guy, When Breath Becomes Air, but it's kind of sad because the fucker's dying, but it kind of gives you a good boost on life. You don't feel like such an asshole all the time. Let's see. I just read these fucking books by Tony Robbins, these finance books like Unshakable. It was pretty good for like retirement accounts. Let's see. A lot of the old school books have PDFs. Dude, this book's from the 70s. It's all right, but it's called Hit and Run Trading by Jeff Cooper. I got it in PDF. Don't quote me on how I found it. It's pretty good. Let's see. Shakeable. Hey, this Dr. Brent Steenberger has some good trading psychology books, but I warn you, man, all trading psychology books are super hard to read. I actually hired one of these guys that wrote one of these fucking books to teach me what was in his book. I ended up paying him like 20 G's over the course of like 6 months because I could not fucking decipher his fucking book. But, I mean, I got to work with him one-on-one. He was a really nice guy. He ended up being a really, really good friend of mine. And he did a bunch of classes for our boot camp. So I thought that was actually really cool. And his name is Dr. Brent Steenberger. He's got a good book called The Daily Trading Coach. That's pretty good. But dude, these things are dense. See, that's why I feel bad recommending books like this because They're so fucking dense. Like, it took you 10 fucking hours to read 2 pages of these things. Dude, I'm currently reading, so I'm big into historical fiction. It's kind of nerdy, but I'm big into historical fiction. So I've been reading this book, these books, The Warlord Chronicles. I'm big into medieval historical fiction for some reason. That's like my new thing. I always go on these fucking weird tangents of them. But I'm reading these Warlord Chronicles. That's more about like King Arthur style stuff. So I'm big into some of that stuff. This book, The Buddhist Trader, is decent. It's a little bit hokey. She's like, it starts off really well, and then she starts telling you to use these fucking crystals and shit. And she's like, use these crystals, and it's the feng shui. And you're like, then she lost me a little bit. She's like, there's the telekinetic nerves from the fucking electrical grid, and we all know that there's nothing good that comes from power lines, but shit, they're all around us. What are we going to do? And she's like, use these fucking crystals and bathe in them and rub them on your wiener. And also, sorry, I got carried away. I apologize. I tried the Cal Newport book too, man. This stuff is too dense. I just fall asleep. See, my problem is I don't sleep enough. So when I read a boring, like, nonfiction book, man, I fall asleep so quick. You'll just see me like this. I fall asleep like standing up. Because I have a stand-up desk, right? So I'm like, but I have that book too, but I have like 80 books. So my problem is, like, I think I'm more learner. I'm more of a learner than I really am, probably. So I have like fucking hundreds of books on my iBooks, but like there's like so many of these nonfiction ones that have gone unread. Like I've read like a lot of them. Like I read through them and then like I'm like, what the fuck just happened? I gotta read them again. The good thing is you can highlight stuff. I think I'm just more into like maybe just adventure stuff. Who knows? I think I'm just a fucking crypto nerd. The Entrepreneur Roller Coaster. Is it entertaining? So I can listen to myself talk and entertain myself. Shit. The compound effect. I do actually read probably a couple hours a day, though, oddly enough. How much I retain, who knows? Compound effect. Entrepreneur. All right, guys. Well, it's been real. It's been real. It's been awesome. By the way, guys, I left you guys my phone number. Feel free to text me. Like, don't be shy about it. I wouldn't even really worry about it. I don't even know where I put this thing. Hold on. Yeah, and use it. Do what you can. I have warned you. I've sometimes pick up. I don't have much free time sometimes. I pick up the phone in awkward spots. I maybe just in my underwear. I maybe do number 2. No, I'm just kidding. Sometimes I'm mostly sitting around my bathing suit half the day. So, yeah, if I pick up, I'm just hanging out. Relax. I'm mostly going to the beach. I'm not trying to freak you guys out. So that's it. My friends, it's been awesome. I highly recommend, whether you're working with me or somebody else, learn stock trading. It's going to change your life for the better. The thing is this, guys, take this with you. Whether you learn how to day trade or not doesn't matter. See, you all have retirement accounts. You all have 401ks, right? You're all going to do longer term trades. There will be no Social Security in 20 years. You're going to need to survive on your own. Your retirement accounts need to grow from 10% to 20%. Do you realize the difference if you can make that happen and what it will be in your life? Most people don't have enough money to retire and they don't get any returns. Their financial advisors, their mutual funds, suck them up with fees. You cannot make money long term. They just bleed you out with fees. It's exponential return in fees. If you can take care of your longer term stuff even on your own, you could take a small amount of money, and if you're making 15, 20%, you can retire with the full wage you need. Where if you're doing 7 to 8%, you will have to save thousands of dollars every single month. It doesn't seem like much, but that 10% a year compounded over 20, 30 years ends up being millions of dollars. You know, I'm 35 years old. I put a few $1,000s in my Roth IRA at the point. I have my retirement accounts. And what happens now is, right, they double every few years, right? When you get to a good return, they'll double every few years, 3, 4 years, without taking much risk. When you go through your financial advisor, some asshole at fucking Northwestern Mutual, and he charges you 2% fee for this, and 2% tax for this, and 2% load fees, you will not make any money. Not what you need to retire. And so whether you're doing this class or that class, you still need to learn how to trade, even if it's not day trade, because your longer term future depends on it. Remember that all calculations for retirement go under the assumption that you're going to live till you're 75, 78 years old. Guess what? A lot of you guys in this class right now, mark my words, will live past 100 years. Who's going to take care of you when you're 100 years old? Your fucking kids will be 70. They might be 80. Who's going to take care of you, right? If your kids are 80 years old, who's going to take care? Your grandkids? They might be 60 or 50. Your great-grandkids? You're starting to get so far down the line, right, that you're on your own. You got to do it, right? You should be taking care of your kids anyways, and your grandkids, and your grandkids, right? It's about building a legacy that lasts right down the whole family tree. And so remember that, you know, in my family as Indian people, right, we take care of the grandparents and, you know, and the parents, and we all live together. But guess what? Now people are living to such a long time, and there could be in your house, there could be in your family great-grandparents and great-great-grandparents. Think about that, right? People are already living in their 90s and late 80s. My fucking grandpa smoked a pack of Marlboro Lights, Marlboro Reds every day, drank a bottle of whiskey, still lived his fucking 90s. Imagine some of you guys drinking MCT oils, going to the smoothie shop, right, doing yoga all day. You could be freaking doing 150 years old. Who knows? We don't know what's going to happen in 20 years, but the technology is changing enough where we've got a plan to live to 100. That means that you will be retired more years than you worked. Think about that. You were retired more years than you worked. Think about how much money you will need. A lot. You may be trading or investing your own money into your 80s and 90s. And guess what? It's computers, right? You could be 80 years old and do this. I got a student of mine that's 78 years old right now. Dude, he has a stand-up desk. He's the fucking man. He's like Jack Palance. All right, so that's it, folks. Be real, be good, be fast. Scott, I will trade on any exchange where I think I can make money. My bad on that. There are some stocks you could trade on the Amex. I wouldn't worry about it. A majority have to do with the NASDAQ just because tech is hot right now, but, you know, I'll do whatever I got to do. Guys, I love you. I appreciate you. It's not, dude, I know taking 2.5 hours to watch some guy babble about himself is a little bit long. You probably go to those automated webinars and, right, they're like, hello, let me tell you a little bit about some money-making secrets that I have today. I'm going to tell you about 3 amazing secrets that are going to make you go to the bank. Right, dude? I went into one of my competitors, and I always, you know, see what everybody's working on. And it's like, hey, they have a live webinar. And I'm like, wait a minute, how could there be a live webinar? It's like 1 in the morning. I'm just fucking creeping on somebody's website. And they have this automated live webinar. He's like, guys, let me tell you something right now. And I know you think this is a recording. And then he gets like a fake phone call. He's like, hello, Ross. How are you? And he's like, hello. Hold on, guys. I've got a phone call from my dad. And you're like, at 1 in the fucking morning? Give me a break. And then they say, like, it'll be like, oh, and this webinar is going to fill up. And you, like, see, like, the counter going up from, like, 50 to 100 to 400. Every webinar you see, unless they say dick, balls, cock, boobs, awesome, America, God bless. It's all automated. It's all fake. Guys, I love you. Be real. Don't fall for any automated bullshit. You can't learn anything from fucking videos. I love you guys. I shall see you. Use my phone number. Use my email because I'm ready to chat. I'm a teacher by nature. Peace in the Middle East. 1980s term for those of you guys that were born after that.